All right, all right. Good evening, good afternoon, ladies and gentlemen. This is Dr. Greg McLeod from Elite Traders University. So good to be with you here for Bulls versus Bears, the weekly Forex forecast. Yes, we're back online after a hiatus, and it's so good to be back with you guys to be able to share with you my insights and knowledge and what I think about the markets. I've been doing this for about 30 years. I'm a former Wall Street currency analyst for one of the largest forex broker dealers in the world, and glad to be with you. Glad that you're a member of the channel. Thank you so much for being part of our groups and things like that. So let's go ahead and get started. I'm going to pull up my screen and let's get going for Bulls versus Bears, the return. Awesome, awesome, awesome. Okay, and we're going to share our screen, share some sound, and let's do this thing. Okay. All right, Bulls versus Bears weekly Forex forecast. And for this week, actually, we are it'll be the last day of September, but we're going to be rolling right into October. So we have some October news going on. Okay, great. And let's keep it moving, keep it spicy. Let's do this thing. Okay, let me direct your attention to the risk disclosure on your screen to make sure you understand all risks associated with foreign exchange trading. And my name, again, Dr. Greg McLeod. I'm the founder and CEO of the Elite Traders University. I've traded options, futures, stocks, forex, and crypto. And I'm one of the foremost authorities of short-term day trading called scalping. I scalped when it wasn't popular, guys, and I brought it to the forefront. And so it's really great that I see more people engaged in it. I think it's the safest way to trade. If you want to find more about it, we'll wait to the end. I'll show you how to get in contact with me. Okay. But I created a system called the Pip and Run system, one of the best scalping systems in the world. I've been using for over 20 years to create millions of dollars. And so I look forward to you being part of that. Okay. So under our agenda, we're going to be talking about the dollar index, the euro dollar, the pound dollar, Aussie dollar, dollar yen, dollar cat, the majors. The majors are what drive the market. And so we're also going to take a look at gold, silver, oil, SP 500, and we're going to actually start with the economic news and world news that can impact the market. All these markets are interchangeably. And then so we'll probably maybe cut these up into smaller pieces because you guys will probably are interested in certain things. But I'm just going to record this whole thing for you. Okay. Awesome. Okay. So let's go ahead and start with the economic news. I'm going to use my favorite tool that I love using is my market heat map. My market heat map is an arrangement of currency pairs by percentage change. It tells me what's hopping, what's popping, what's dropping, and what's not in the market. And so let's go ahead and get over to my market heat map. And okay. Well, first of all, we have the market. The market was on a Friday, jumped 100 points, and Dow Jones Industrial Average up the 0.3%. S&P down about 0.1%. NASDAQ down as well, about 0.39%. Russell 2000 up almost 2/3%. Yeah, big rally in the U.S. 200. I know Tina's one of my newest students in Pip and Run showed me a great chart where he drew some flags and kind of gave a forecast, and already into our Pip and Run for about a month and already forecasting the market like a pro. Big shout out to Tina's. Okay, let's go right to our let's go to my market heat map, and we have it all lined up here. Okay. And okay, trading signals. We're gonna go here. Okay. My market heat map. Okay. Whoa, that's down it. There we go. My market heat map. Not my crypto wallet. My market heat map. This is my top secret tool for actually finding. It's an app. It's an app that I developed, created about almost 10 years ago. I've been using my market heat map for 10 years. It's hard to believe that this little device is still around after all these time. But it's my top secret tool for finding trades in the market. Tells me what's hot, what's not, what's popping, what's dropping, what's hopping. Green is an uptrend, red's a downtrend, gray is stay away. $19.99 a month. But you can go to the front page for free and get one of the heat maps right now. This is Sunday, and the market is closed. Well, actually, the market keeps going, but the desks are closed. And notice they're all gray. But when the markets are open around the world, these will change dynamically and change colors and move about. Okay. But we're going to go to the economic calendar. You can access that for free as well. Come to the front, go to mymarketheatmap.com, get a free economic calendar. And here we go. We're going to go over the economic calendar. Why? Because the economic calendar drives the market. It drives what's going on. It drives the moves of the currencies. Okay. Just like the crop report in trading places. That's what each one of these is a crop report. And I only look at the high impact items. When you come here, you might need to filter it. I always only choose the high impact items. I scroll down, press save, and that way I don't get all these other, God bless Syria and Tonga and Tanzania, but I don't want to see their news. Okay. So that's how I get all the high impact items. We're going to go through these one by one. We'll start for Sunday. Sunday, Monday, China has manufacturing coming out. The PMI 49.1, forecast call for 49.5. We're seeing maybe a little bit of recovery in China because of liquidity operation. China has been slashing rates and pumping a lot of money into the economy in order to revive it, because China has been usually a global growth engine, but right now it's been, they missed their growth target, their 5% growth target. And so they are pouring tons of money. I got like a bazooka, and they're just like shooting money at the property sector. They're even giving money to people who are just, who are making under the poverty line. They're sending like money, cash checks to try to stimulate the economy. Okay. So it's because it's been low in comparison to where they've been. And why we don't really trade the Chinese renminbi, but remember that the Australia and New Zealand trade with China, and where China goes, Australia and New Zealand currencies and economies go in the same direction, right? So that's why we will look at the Chinese data. And also, they're a global growth engine. So if they have a lot of money pouring into their economy, then it pours money into our economy, and that causes the stock markets to rally as well. Okay. So we have Monday, we're looking at European inflation rate year on year. They're expecting inflation to drop from 1.1% to 0.8%. And inflation rate in the Eurozone, we have a German flag here. Germany is part of the Eurozone, as well as Italy, one of the largest economies in the Eurozone. And we see inflation mitigating from 1.9% to 1.7%. And that's going to impact the euro. Okay, so these are going to impact the euro. They call it the United States of Europe, right? So these are each country is like an individual state. They use one currency. There's no Italian lira anymore or Deutsche Mark anymore. They use one currency called the euro. And so we would look at the euro. Usually, if interest rates are falling, that could be good news for the economy. Monday, also, we have Fed Chair Powell's going to speak of a United States flag. I call this fund with flags, okay? You look at the flag, and now you know what currencies we're going to be trading, right? We're going to look at maybe dollar CAD. We're going to look at dollar Swiss, dollar CAD, the dollar yen. But we'll also look at the euro, because the euro is considered the anti-dollar. So Powell is going to have a speech, and hopefully he doesn't mess up the rally in risk assets by saying, "Oh, well, we have too much liquidity," because they recently cut rates. But so be careful. This is going to be at about 11 o'clock. No, 1 o'clock. Sorry, 1 o'clock p.m. Eastern time. And so it'll be after the trading hours. So we probably don't need to really watch it, because I don't like trading afternoon. I'll do it, but I'm done in 2 hours. So, I get up at 10. By noon, I'm done, right? If you will find out more about how I do that, how I trade for less than 2 hours a day to make a good living, well, go ahead and click in the description below and find out. Okay, we've got France, we've got data. We have the HCOB manufacturing PMI final, 43.9. Higher numbers are good. Lower numbers are bad, and usually the year will benefit from this. It's going to be actually kind of early in the morning, about almost 4 o'clock in the morning. when they're releasing this news. So if you're trading the London session, we're definitely going to look at the euro. Also, we have HCOB manufacturing PMI final. Supposed to actually drop from 42.4 to 40.3. All we're going to use these numbers for, or actually the flags, are what we're going to be looking at. I use the economic calendar to let me know what I'm trading, right? Just like in trading places, they're trading the crop report, the frozen concentrate orange juice. So they were trading the orange juice market, right? So if there was something about gold, we just trade the gold market. Right now, we're looking at the European market, right? Because the news is going to impact Europe. So we will look at the euro. And I wouldn't necessarily trade at the announcement. I'll talk more about that later, but I would wait maybe 30 minutes before I had a student. He was eager. He saw signals and he jumped on a trade and he wound up losing, right? And the reason why, because he didn't follow the rules. Rules are wait 30 minutes to an hour after an announcement, or if you're going to get into it, get into a very small position with very small risk when you're going in, because the moves from news can be it's like wasabi, a little wasabi and some sushi, good, right? But if you I had a friend trick me and say, hey, look, this is guacamole. You stick a chip in that stuff and, too much, right? And that when you get your position size too big on a very spicy move, like big volatile move of spice, and we get a big spicy moving like that, you don't need much. You can put a 0.1 position on and the thing goes like 50, 60 pips, you're going to make some good money, right? So very important to gauge your position size based on risk. Use a risk-based, a risk-adjusted position sizing, okay? So again, we're going to look at manufacturing PMI coming out of Europe. Again, for October, we're going to start off October with the European data. And this is the fourth quarter, guys. So into October usually is really good for equities, really good for risk on assets. I'm excited. I was born in October. October 12th is my birthday. And so I'm really excited. This is the best time of the year to trade from October going into January, February. It's going to be really good. They do some inflation, we get past the election, and it's going to be very, very good. So if you don't know how to trade, if you're losing now, I suggest that you strongly enroll in mentorship so you can know how to take advantage of this fourth quarter. The big boys make their money now till January, okay? But they make the lion's share of their money in the fourth quarter, right? Why? Christmas is coming up, and they want those bonuses to get that G.I. Joe with the Kung Fu grip, if you know what I'm talking about, right? All right, inflation rate year on year. The Eurozone supposed to drop from 2.2% to 2%, and which means they could probably do a rate cut, right? CPI flash dropping as well, 126.72 to 126.7. Core inflation rate year on year on the flash unchanged, right? Getting closer to that 2% target. The world is trying to get to a 2% inflation target, and it's coming down. And then at 10, we're going to have JOLTS job openings. They're supposed to actually drop from 7.67 to 7.65. We had rising interest rates for a long time, and they were higher for longer. And it takes probably 6 months for those rate hikes to hit the economy. And so they are starting to hit, and we're seeing slower job growth. We're seeing, some businesses suffering, missing earnings announcements and things like that as a result of what was done. It's almost like when you got a printer and you're trying to print, you keep pressing print, and nothing comes out, right? And then you go to the store and come back, and all these papers are piled up on the floor. Well, that's what the rate cuts from rate hikes from the Fed, or any type of action from the Fed, when they start raising rates, right, in order to cut inflation, we still have inflation, right? Because it takes time for that stuff to move through the economy. So they did that stuff a few months ago. We're starting to see the effects of those rate hikes now, right? With lower job growth, with closing down of companies, missing earnings and things like that. And so that's why we're seeing the Fed doing the reverse, right? They're like, we're going to cut instead of 25 basis points, 50 basis points, right? So I hope that explanation clears things up for a bit, right? That, why are the Feds cutting rates and why are things getting worse? It's like, because it takes time. It'll take 6 months for the rate cuts to be actually felt in the real economy, right? So you're looking at what? It's October, November, December, January, February, March, April. We're not going to see anything substantial impacting the local economy, real economy, like affecting prices until April, right? Okay, so I said no. Let me know in the chat box if that's clear to you, and let me know that you're tracking. Take notes. Take notes in the comments section. Use the comment section so you come back to the video. You go, oh man, what's this all about? So something that catches your eye, something that's interesting, an aha moment, a golden nugget. Go ahead and put it in the chat box below. The comments below. And I'm responding to the comments that I figured out that you guys are commenting. I'm like going, no one's commenting to me. Oh my goodness. Ooh. And then I press this button. I go, oh my God, you guys have been talking to me for 10 years. And he was like, dude, okay, anyway. And, I trade. I'm a trader. I'm not a technical guy, if you haven't realized that or not. But we're going to change that. We're going to get some editors and woo, 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 flash, flash, flash. To get you guys looking at the channel and stuff like that. But, just right now, doing it old school, right? JOLTS job openings, we talked about the ISM manufacturing PMI, unchanged at 47.2. Then we're going to have Japanese data. Now, Japanese data we hadn't usually paid attention to because the Japanese yen is usually kept weakening, right? But we're starting to look at Japanese data down, unchanged at 13. Okay, consumer confidence supposed to actually a dip from 36.7 to 36.5. Which could mean that they will cut interest rates or actually hike interest rates anyway, right? Wednesday here, we got European employment rate unchanged to 6.4%. ADP employment change is we're going to come up with, this is non-farm payroll week, guys. ADP employment change supposed to rise from 99,000 to 110,000. I tell you, we're off that 200,000 job track, right? And remember, even Jay Powell himself was suspicious about the employment data coming out. I mean, he's like, when the Fed chairman goes, well, those numbers seemed a little bit disingenuous. It's like, well, what's that mean? He doesn't trust the labor numbers either, right? And he probably knows what the real labor numbers are, and that's probably why he reacted with a 50 basis point cut. Like, oh, these things are really worse than things are really more dire than they're telling us, right? Because the Fed has never cut to prevent something from happening. They always cut when bad things happen. So it's like everything looks good. It looks okay. It's going to be better. But why are you cutting 50 basis points? Is the question, right? Just speculating. Aussie dollar balance of trade. Australia. I'm sorry. Aussie dollar. Australia. 6.00 billion to 6.1 balance of trade increasing. We also have Swiss CPI 107.9. No prior number was given. I've never seen that. No previous number was given. I must have went to sleep or something. All right, they just didn't put a number there. HCOB services PMI out of France comes out. It's supposed to drop from 55 to 48.3. And also and I get this is the Olympics. This is kind of interesting because the Olympics were in France, and the PMI was actually down. We have German HCOB services PMI final 51.2, and this backward looking. So it's probably when everyone was there in France, they probably took the time off, right? And that's probably why the number dropped. Initial jobless claims supposed to actually rise from 218,000, 220,000, along with the thesis that the job market is worsening. U.S. We have ISM services PMI 51.5, unchanged. That's going to impact the euro. When I'm looking at Thursday day, I'm looking at the euro. Okay, guys, that's what I'm going to be looking at because all this data, you got the anti-dollar, the dollar. So I'm trading Thursday. I'm euro all the way. Friday, October 4th, my daughters, happy birthday, Kira and Krista. Happy birthday to my brother who doesn't celebrate birthdays because he's a certain religion. Happy birthday to you anyway. Uh, I love you, brother. And a big shout out to Derek McLeod. Awesome. And I'm going to be in Texas this weekend. Celebrate my daughter's birthday, right? We have U.S. average hourly earnings month on month, 0.4. Earnings are dropping from 0.4% to 0.3%. That's good news for the Fed. The Fed doesn't want you to earn any money. Why? Because if you have money, you'll start spending. You start spending it, you cause inflation. So they want you poor, broke, and unemployed. So that's why you need to learn how to trade, guys. Get off the grid, unplug, and become a trader with Elite Traders University. Non-farm payroll is the big number, the number that we've been waiting for. We're looking at, and the number that we can't believe because who knows what number they'll come up with that they might revise. My forecasts show that we should have something really dire and not very good, based on these forecasts that I look at, and I won't even put that forward. The forecast number won't even make any, no matter what computer model says, these guys are going to probably make up a number. And they're going to trade off that number anyway, right? They're going to trade off what they see. They may be a little bit suspicious and not be as active with the number, but they're going to, they got to pretend that this is true. So they call for a rise from 142,000 jobs to 145,000 jobs, right? And the unemployment rate to be at 4.2% and to be unchanged, right? And then we have some Canadian data, but IV PMI is supposed to rise from 48.2 to 50.3. Again, strong employment data usually means we're going to have a stronger dollar and a weaker euro, right? So we might want to examine that again. Look at the euro. We'll look at the dollar pairs here. I'm not going to be looking at the Aussie Kiwi trading that when I've got big U.S. data going on for Friday, right? And then you're going to wonder, you can be in the wrong currency, and then you're going to wonder, well, gee, why didn't I make any money today? Well, because everyone is over here playing in the playground, and you're at a party with flat chips and no beer, right? So you want to be at where the party is. The party is going to be in the euro. It's going to be in the U.S. dollar on Friday. Okay. All right. So I know Greg's like, I'm tired of fundamentals. Let's get to the technicals. And I hear you loud and clear. Let's go ahead and get onto it. I'm going to go to TradingView. And let's go ahead and look at we'll start with the dollar index. Okay. I like to start with the dollar index. The dollar index gives me a good view of the market. And, so I kind of like know what's going on. I like starting with 50,050, as you know. Going to start off with that monthly way out there. Go, Greg, I don't trade the monthly chart. No, don't worries. The monthly chart gives us a directional bias, and we can see that we have no directional bias. This is the U.S. dollar index, the basket of currencies versus the U.S. dollar. We can see that we had the high of like in the 115 area from the low when interest rates were near zero and the dollar was trading at 89.11. Okay. We can't really necessarily trade this, but just substitute DXY for USD and DXY because we have USD JPY, USD CAD, and we have EUR DXY, right? Euro versus the dollar, or the pound versus the dollar, okay? So if this is going up, the euro's going down. And if this is going down, the euro's going up. Pretty clear, huh? I keep things very simple. Colors, my candles are colored. So these are Heikin-Ashi candles. I've got a video on Heikin-Ashi that you can look in the description or in below. Okay, but here it is. Green is up, red is down, Heikin-Ashi. We can go to the settings up here. You can actually change it right here, the Heikin-Ashi. You got the right here, right? I've checked out candlesticks, in our course. But if you would like to have a video on candlesticks, I also have one too. Okay. So we broke the trend line, but what's going on now? We're in a range. We're in a range. We've been in this range for a year. Can you believe that? Almost a year. We've been moving sideways between this level of, we have level of support about the 100 area, 99.7, a high of about 107. This oscillating back and forth because many people thought we would break out and come back to the old highs, right? But the bond market basically said, no, the dollar index, we're just going to hold the range until we have this is indecision, right? We're not, the markets will trend 80%, 20% of the time they'll trend. 20% of the time markets trend, 80% of the time they're in a range. Look, we've been in this range for a long time. So why are we in a range? What's the indecision? And the answer is we have an election in just a few days, right? We have Harris versus Trump and an election, and around the world, the whole world's watching this election. And depending on when it finishes, I don't think the market has a bias over which one they prefer, but it's just uncertainty. People don't like uncertainty. So this reflects uncertainty in the market. It's happened before in the election cycle, 2016, and so we get this, or 2020, 2016, and 2012. We get the sideways move in the dollar. After the election, we'll either see a breakout, south side breakout. We break this range, and it's all clear, right? We've got, because the market does not like uncertainty. It doesn't like indecision. And right now there's a lot of indecision about the policies and things like that. And so we're basically just trading the range until we have some type of victory from one side declares victory, right? But we are hitting support, right? And so we may, we still have, a month before the election. So we may get a rebound from this area, right? We may see a rebound within the channel. It's like Pong. You guys, you old guys and gals out there used to play like Atari Pong. And it's like ping pong or pickleball, right? Back and forth, doo, 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 right? And then, so now we're at the support area, and every time we've tested this area, we have rallied up, right? So that means that the euro could go down, the pound and Aussie, and then we also could see a rally in the dollar, right? Dollar yen could go up. We also could see dollar Swiss and dollar CAD rebounding from this area, right? So this, and we can walk it down to the weekly, and you can see that candles are getting smaller. Okay, you guys are like going, oh, Greg, these candles are weird. Can you go back to, there you go. Does that help you? Does that help you? People don't like change, but see, every day we've come down this area. So we would look for maybe a break above 101 to confirm a bounce here back up to, maybe back up to here, right? So we could get, we might get it's going to fool a lot of people, because if you're not watching bulls versus bears, you're going to think, oh, well, the Fed cut rates, I'm going to be short dollar. It's like, duh. And because why? The short dollar trade has finished, right? And so what losers pay winners. So you got all these people who are short dollar, they're about to get crushed. Okay. So there we go. Right. And then what happens is all the long dollar people come in, and we'll get maybe halfway here. We'll bounce a little bit, and then we'll drop, and then because why? They're going to start cutting again. And then we'll probably break the support area. But right now you can see that the volatility has dropped. We're in a tighter range. We went from a higher range to a tighter range, and usually low volatility precedes high volatility. So we got compression, expansion. So that's what we're looking for, an expanded move that will take us out of here, right? Let's drop it down to a 4-hour chart, and you can see that we're just coiling up for a major move. Okay, so I'm just going to keep going. Let's keep it moving, right? And we'll just go to the to the euro, right? The euro is the anti-dollar. So let's see, we should have a move where we see maybe the euro topping and the euro dropping, right? So let's that's our thesis. Let's take a look, and we can see, look at the big move up. I mean, just successive moves, month after month after month, bullish move, uptrend in the euro. And all you euro bulls, you got paid. Just got paid. Okay, you got paid. Just got paid, right? But we are coming against some resistance here. And Powell may even talk down the or talk up the dollar, saying that maybe we're don't get ahead of yourself. He doesn't want the equity market to go nuts yet until his buddies get paid, and so we might have to talk this market down a little bit. So we see the euro coming up against old high at 112.80, 65, 112.65, and we can see maybe a trend line break here and make a little bit of a pullback before we eventually break out of here. We got a little Adam and Eve pattern, kind of like, so we get this, spike down the curve, flattened curve, or a high and tight bull flag. We have maybe a bull flag pattern, and then maybe we see a push out, right? A push out, and the push out could be substantial, right? So bye one more little head fake here. We got ahead of ourselves with the Fed rate announcement, Fed cut. But minimum target, I'm looking at the old high back here, 122.81. But I think we pull back first. We pull back before we get a pullback. Let's take a look at a weekly, and we can see, we might maybe pull back here. We won't pull back that far. Maybe pull back to support, 109 or so. Let's see, daily, very high and tight. I mean, we got really a channel here. So a more conservative target in a range, maybe come back, 109, right? Looks like we could, get the euro bears will have one last hurrah. And then once we break at the 112 area, then this thing is probably going to go to the moon, right? Because typically there's seasonalities here going on too. I don't have it, but there's a book called the Stock Traders Almanac. The euro goes in line with the S&P and the NASDAQ, usually in directional. So if you put the two together and overlay them, you can see that they have a similar pattern, right? Similar breakout pattern. And so we look for the euro in the fourth quarter to be at new highs, right? So moving down to 4-hour chart, we can see it was just coiling, right? But I see a double top here, and we can see maybe a push down. So I am bulls versus bears. I am bearish short term on the euro, bullish for the fourth quarter though. Right. So I don't have my so we've got some topping action, lots of resistance. Might even get a rally going Sunday, Monday, and then the drop. I'm looking for, don't pop to the drop, looking for that drop, right? So again, the euro, bulls versus bears. I am bearish. I am very bearish the euro. Okay. Okay, let's go to the next one. Let's go to the pound, right? And okay, pound. Let's go to the pound. We're going to go across the river here, across the river. We're going to go across the English Channel, and we're going to take a look at the again, and the pound. Similar, they have countries that have similar geographical proximity to each other. Will have similar movements. And you can see this almost looks just like the euro, maybe a little bit more stronger, a little bit more pronounced, right? Big bullish move, nice little ABC, right? But ABC to a resistance area of Fibonacci from the swing high that we had back on June 1st, 2021, down to the low that we found probably October 3rd. So almost 2 years ago. We're opening at 786 ABC. We're looking for a move back down from here. It's like, but Greg, look, it's an uptrend, higher highs and higher lows. Yeah. But when you but there we're looking for a move back down. This is a bearish, actually it's a bearish Gartley pattern. Very, very bearish, right? So we can see maybe a move back to the probably not that far back, maybe to this old support area here. Or maybe it's even to the fib, 122 or so, right? That would be pretty bearish, but short-term bearish. Okay, I think we really get, we might not even get that far. We might just get back to the 127, right? Just because we broke out from resistance and we broke out, and so price usually returns back to the scene of the crime, right? Return back to the scene of the crime. RTTSC weekly chart, you can see that we had these big surging moves, green candles, and now we're kind of slowing down. It's a weekend and everything, but price could get a rollover there. I'm looking for, again, I'm looking at the lower time frame too. So bulls versus bears. I am very slightly bearish. I'm short-term bearish. Right? Short-term. But I am long-term. I'm long-term. I mean, this thing's going to go super high. I'm looking for this is a gap here from 2016 gap. I look for like the 150 on the pound dollar. So bye. My old friend Jim Cramer there. Yeah. We all know and love here. I'm going to throw this bulls and bears soundboard action here to spice things up a little bit. Let's keep it going. We can go to the dollar Swiss. Dollar Swiss is kind of a funky kind of currency pair. Ever since the Swiss National Bank, depegged their currency to the euro, causing a massive decline. That big giant drop in 2015. Well, traders and market makers, they just don't like the Swiss National Bank. And we can see after that is big. This is a one-day drop from 102 down to 82. It's like, really you had to drop that far. That's like 1,800 pip drop, right? Yeah, it's huge, right? But then we move sideways, and then see, everything's been sideways ever since then. So the market has the memory, 9 years of just shopping around. And no one really wants to get caught on the wrong side of there. But we can see here on the going to the monthly that we have pulled back to a level of support on the dollar Swiss, and we can see we've hit this area here, and with a double bottom here is usually a bullish pattern, right? So we're going to look for a move higher, a bounce from here, in line with the dollar, because it's USD in the front. Remember, I told you the bullish the dollar scenario, right? Again, bullish dollar Swiss, right? Walk it down to the weekly, looking for a bounce. You want, if you want to do, so we can do a close above that candle. 85.10, we can bounce above 85.10. We've got a good maybe move back up to maybe probably not that, I'm looking, how fast this thing is moving, not moving a whole lot, but maybe move halfway, maybe back to the 8,900 area, right? Like 500 pips. I think it's a great time to actually change, sentiments change, because everyone is like, they cut rates, the dollar's going to go down, the dollar is going to blah, blah, blah. Yeah, it's going to go down, but not now. I think we get a rebound. We might not get that much of a rebound, but a rebound before the drop, right? And once everyone gets long, they'll trick them again. Ha ha. All right, and they'll drop, right? Dollar Swiss, again, I am short-term bullish. But I am actually short, yeah, but I am long-term bear. I'm looking for this thing to break support and just drop. Right, but not yet. Bullish first, drop later. Okay. Daily chart, you can see that low volatility precedes high volatility. So we have this compression, and then we'll see an expansion, a breakout, right? You're going to get this kind of bullish engulfing candle. You're going to go, oh, what happened? I was short. I'm going with the trend. The trend is your friend. No, it's not. It's changing. It's your friend, but it's a manic depressive friend that hadn't taken its meds, and it's going to shoot up. And you're going, what happened? and then you're going to go, what's going on? And then you're going to try to get with it, and it's going to drop on you, and you're going to say, this thing is cray-cray, right? That's a technical term. Okay, dollar Swiss. Okay, let's jump to the other side of the earth here and check out AUD USD, one of my favorite currency pairs to trade. Great people. Big shout out to Lachlan over at Ox Securities. Great guy. Just talked to him on the phone. Great brokerage. There'll be a link in the description if you're looking for MT4, MT5, and you want to be able to wire funds into an account. Take it note that what jurisdiction you're in. It may not be available to you, but if your jurisdiction makes it available, Ox Securities, tell them that Greg sent you. Okay, this is the Australian dollar going out to that 50,000 foot view. Remove all drawings. I've been, I was hitting it. I was doing Aussie dollar. I love you. All right. Anyway, there we go. So we get nice support, and see that China news got the Aussie dollar got it going, right? Got a nice little lift off, but the lift off might be a little curtailed by the little strength of the dollar. It might move sideways. It might not. Usually the Aussie is the, first to move, Aussie and Kiwi. However, we had the China drag, and the China drag has dragged the Aussie down a long way, right? It's been kind of, right, inflation, when you have a currency that's not as valuable as it used to be, you buy less and prices are higher. So we might get a relief, guys. So good day, mates. Might see a stronger Aussie dollar, which will be good for your economy, right? So we're looking, but again, we've got this range here. We're at the top of the range, and we might see a little bit of a pullback and weakening of the Aussie dollar short term, right? So I'm short term bearish, but I am long term. Bye. I am, because we get a breakout. We're going to get a drop and a breakout out of here. We could see 79 on the Aussie dollar. Not right away, Like, hey, Greg, it might take 6 months to do it, but we'll be moving in a very good direction. Seasonally, the Aussie dollar moves in the same direction as the U.S. stock market. So you can see, look, this is the fall, right? And look at it. Look, go back in time, right? And then go back here. Look, rally, right? Rally into February, and then a drop, right? And you go back. Just go back in time. Just take a look, and then don't take my word for it. I mean, you might have like something like COVID or something, then things got kind of wacky. But outside of that, go here, and we go, we got a rally, right? So that's November, and we got a rally in December. We rallied, right? Go back another year. Keep going back. Let's try it again, right? Let's see if this works again. Okay. Well, here we got. Well, here we got. What happened here? 2014. Did we have something whack that happened? We got a rally, but not very much. We were in a downtrend, right? Fed was hiking rates. That's what's going on, right? So we're not in a Fed hiking rate cycle. So we're probably, this is our bottom. Our capitulation bottom was here, right? Head and shoulders. We have maybe our right shoulder over here. We can see a move back up to 79. So I'm very bullish Aussie dollar. Look across the Tasmanian Sea and look at USD, NZD USD, the Kiwi, and we can see that we have a move here as well. And look at this, even more so hidden up against this resistance here, but a breakout. Look at the uptrend within the channel, right? From a low of about the 58.14 to a high of 63.41. Just a nice bull move, right? But this, we're at old resistance, and looking for the dollar to, even though it doesn't look it here, it still looks pretty strong. But look how we have a slowing candle, slowing momentum. Month end, guys. Month end, you can be pretty volatile. And then, we're seeing like 1, 2, 3. We're hitting this multiple times, not able to break this area. We could probably see sellers coming in. Right, we go to my market heat map and actually log in. Take a look at we'll look at some sentiment. Sentiment means, I call it what's going on here? Who am I? Who am I? Who am I? Log in. Okay. All right. Log in here. And there's more than just a heat map, more than just technical. We have all kinds of analytical tools. I like looking at sentiment. And yeah, there's sentiment and other things all over the internet, but this saves you time. So you're searching where everything is. Instrument. We can look at currency, instrument, and we can look at the Aussie dollar, right? And again, 61% of people are bearish, 38% are actually bullish. Usually bulls, the losers, there's more losers than winners. So there are a lot of people going short. That's what I'm saying. Short is just a very temporary move. The overall move for the Aussie dollar will be higher, but the sentiment is always a little bit ahead of the game, right? So you said, when more people are short, and in the short term, it will go down, but in the longer term, it usually goes in the opposite direction. So a lot of people are long dollar, right? And that long dollar trade is going to be a pretty good this week, but moving, past going toward the election, look for this. These guys are going to be right. Usually the people who are right are in the minority, and the people who are in the majority are wrong. Losers pay winners. 90% of all traders are losing, right? So the majority will not be right. But even a blind squirrel can find a nut, right? Okay. Kiwi dollar. I'm short term cautious bearish, but medium term, longer term, I see this going rise, right? So this is how I would track it, guys. I would track the New Zealand dollar, where I think it will go. I think it pulls back. I think it, sucks some people in up to the wrong side of the trade. But we can trade. We're scalpers. We don't care, right? We're going to scalp this market. We'll take it down to the, we'll take it down, scalp it to the south side, and then when this thing breaks out, and we can actually also put some meat on this. Let's put Fibonacci expansion tool. Way of finding price targets. I teach that in my Facebook group. I have a video in the Facebook group, absolutely free. How advanced strategies for how to trade, or even there's a video in our archives on how to trade with Fibonacci expansions, or how to trade with advanced levels of Fibonacci. So we can see that, okay. Yeah, I would say the first target be the 60, 65, 79 area. So we get a nice little pullback there. If you're a swing trader, position trader, which I am not a position trader, swing trader. If I were one, if I put my position trader hat on, I'd wait for the pullback. And when we get a maybe drop back down to support here, maybe I'd get long off the position. I have a stop down below, small, maybe 0.1 or 0.01 or 0.02, and let that thing ride up, from 61 to 65 is 400 pips. Not bad payday, right? Try to get that in the bank. Okay, so Kiwi dollar. Let's go ahead and move on to some other currency pairs. Let's look at the USD CAD. Let's go ahead and go there, right? Or actually, let's go to Japan. Let's follow the globe. USD JPY. We're in the Asia area, Australia, New Zealand. Let's go to the Japanese yen. And boy, it's been such a mixed blessing here. It's been taking traders out, making money for traders ever since we hit this high. My goodness, 160, 188. New it's like a 20-year high, right? Or the total weakness in the yen, and the dollar super strong. Now we're seeing this really big, strong push down. We went from this is a 2,000 pip drop, 2,000 pips in just 3 months, guys, right? if you have position swing trade there, you have the 0.1 on there's a $3,000 move. Fantastic. But guess what? It stopped probably at a Fibonacci support area. Let's confirm. And we got the big right there. There we go. 23% retracement, 141.22. And we got double bottom right there. I see the dollars in the front. So I'm thinking of the dollar thesis. I'm looking at this probably bouncing from here, bouncing up a little bit to form a shoulder. This is like a head and shoulders pattern, but it has not finished, right? So it's forming. I'm not talking about shampoo, head and shoulders pattern. And I've probably got a video in the description. If I don't, I'll make one for you. If there's anything that you want to learn that about the market that I have that you'd like to learn more about, tell me about it in the comments below, right? I got this head and shoulders pattern right there. It has not formed yet. I'm looking for a rally to form this right shoulder. So I'm looking for a short-term move higher from, maybe up to that 155 area. So long dollar yen, I'm bullish dollar yen, short-term, okay, short-term, right? This thing drops, people are going, hey, Greg, you said, I said, remember, short-term. But, I'm looking for a drop, right? Maybe much lower, maybe down into the 101 area as the Bank of Japan starts to hike rates, right? So this is what I'm looking for, a bounce from that 42.15, and maybe we bounce maybe half back, go halfway back, and then maybe a drop right there. So yeah, as long as we don't break 162.11, which I don't think the Bank of Japan is going to let happen, I'm long-term bearish, but short-term bullish. Bearish. Okay. All right. Now we've finished with Asia. Let's go USD CAD, right? And then we'll jump into oil, right? Oil and gold, because Canada is one of the largest suppliers of oil to the United States, right? And we've seen oil prices kind of tank. Excuse the pun. Tank, get it? Anyway, here we go. We've been in a tremendous range on the Canadian dollar. The loonie, it's been loony. I haven't really talked about it. Probably no one else has talked about it either because it's in a range. Why? It's in a range, right? Because nobody really wants, oil prices have been falling, and U.S. interest rates have been falling. So basically with both countries in indecision, we got elections, and we do a lot of cross-border trade with Canada. So they're in the same position as we are. So you have the dollar and the Canadian dollar against each other. They're just not moving anywhere, which could be good. If you are a range trader, when we get the resistance about 139.41, we short it, look for a move back down to 131.18. However, in this area, I'm looking at the dollar, the bullish dollar bias. We got indecision doji here. I'm looking for actually the dollar CAD to actually move higher, right? Maybe form a little double bottom there. We see maybe a little bit of rise from the support area back up toward the resistance area there. So we're currently around the 135.15 area. Look for the rebound in the dollar CAD, and might even maybe look more pronounced as we get closer to NFP, right? So again, I am bullish short term. Looking at that double bottom right there, right? Let me see if I can draw that. Give me tools. I have tools. There we go. There's one, and then here's a double bottom right there. So I'm looking for a bullish move back up there. Let me know what your thoughts are on the dollar CAD. Type them in the comments below. And if any currency that you see, Greg, I think you're full of it, man. Tell me. Write it down in the comments. Let's have a conversation. Okay. We'll be better traders when we're able to talk about what we're actually trading. I encourage my traders in the Pip and Run Forex Mentorship and Forex Bootcamp to actually to talk and post their trades. And we have a lively discussion group, in our private chat group. So if you want to join, go ahead and click the link in the description to find out more information. Okay. So again, I am short bullish, but I'm longer term, medium term, like after the election, I'm right. As seasonalities come into play, the dollar strength should continue. Okay. Let's go ahead and go to let's go to oil, right? And we're gonna go to how I can find oil. I mean, there's a lot of different instruments for trading oil. I'm gonna go to open my list up for commodities. Right. I'm using Trading View and commodities, right? And then we got some US oil, right? Oh, we get okay, we got oil. Okay. So here's oil, and oil's been on a, with China. China is one of the largest consumers of oil next to the United States. With a slowing economy in China, the big China growth story. You basically look at the U.S. oil chart. Looks like the U.S. dollar's in a range ever since and now we're moving sideways. And we, after hitting a high of like 146 and then dropping and rising again, we're still in a range, but we're at support in the range, at the 68 area. So we might actually see a rebound. It's kind of weird though to have oil go up with the dollar going up at the same time. So I'm going to go on a limb here, and I'm going to be bullish on oil. 68.57 area. I'm going to look for a rebound. Probably not that high of a rebound. Maybe into the $80 area. I'm looking for a rebound. This looks like a descending triangle, which is a bearish pattern, right? And usually we'll see a south side breakout. But I think we get a bounce. I think we get a head fake. A pump and dump, and an arrow, right? Give me an arrow. Give me an arrow right now. All right. There we go. So I'm looking for a rally up, short-term rally, bull market for a bearish move to the south side, right? So we'll see. And maybe a retest here, as more liquidity and stimulus happens for China and their economy starts coming back, which, with all that liquidity pumped in, remember I told you liquidity and interest rate cuts, they take 5 to 6 months, 3 to 6 months to kick in. So when that liquidity hits and starts stimulating the Chinese economy, we could see April, we start seeing, after a big drop, we might see a big push up in oil as China kicks in and starts demanding oil, right? Also, you're seeing more production from Libya and the OPEC nations. They're also going to be producing some more oil as well. So that when that kicks in, it takes a while for that stuff to kick in, because they're going to ramp up oil production to start paying off, stuff they got to pay off. And when they do, when that supply hits, we might see a drop in oil, right? But right now, I think we short term going into the fourth quarter, we get some stronger, people go back to school, industrial growth, people come back from vacation, and then, heating oil demand, we have climate around the world, demand for oil. And you can see that we're making a higher low, and it's already starting a little bit we're at 68.57. I'm looking for a move to at least about 72.31, but we use Fibonacci's expansions, right? I'm looking at a push back toward 74.21. So short-term bullish, medium-term bearish, longer-term bullish. That's kind of confusing. Like, what do you mean, Greg? Like, don't worry about it. It'll be fine. All right, let's take a look at gold. We're in the commodity sector, right? Let's take a look at gold. And gold has been on a tear. Look at this. All-time high ever in the history of mankind that gold is this expensive. You can see I'm back in the 80s. Look at that, $853. I remember when it was $300, and there was this guy. He would come on, and he was a gold bug. They call it a gold bug. People were very pro gold. And he says gold is going to go up to like $5,000 an ounce, and he would come on TV. Yeah, we think, well, yeah, it's going down, but I think it's going to go up to like 5,000. Well, he died, unfortunately. He never saw the breakout, which is unfortunate. I mean, it stayed in, I think he died in 96 or 97. And so he missed this big move up to the upside, but he was right. And you can see that, this parabolic move in gold, it may be time for a little bit of a pullback, but, the markets can remain irrational longer than you or can be liquid, and we do have this long move weekly chart, still making new highs. Whole number round number resistance at 2,700. I think we hit the 3,000 by year's end. But if you look down at the dailies, we're getting some kind of bearish kind of candles. We're looking at an outside day candle where you have the range of one candle, and then you have the range of the next candle encompassing that. See, I go back to old school bar charts, we used to draw them by hand, right? And you got a bar outside day. This is the day's range. This is the outside day. That's a reversal bar pattern from the 1970s, right? Yeah. Yeah, I know. I don't look that old. It's oil volay. Anyway, going back to those candlesticks. Yeah. So I'm short-term bearish gold. But medium, long-term, bye. Right, I'm looking for a move higher, right? But I think we get a pullback, a healthy pullback, right? I mean, I wouldn't short it myself, I wouldn't short it with your money, but I would wait. I would just wait for a place to buy this at value, right? Buying at value. So we might see maybe a push to maybe 26.14 or so. Not much, maybe we pull back to maybe 25, 2,600. He's like, go on the limb, Greg. Well, we broke out above 25,998, almost 2,600. That was the breakout point. So I look for price to return to the scene of the crime. And then after we return to the scene of the crime, price returns. I'm looking for a push. I keep looking for the arrow. They move the arrow tool down here. And then I'm looking for a push. It's going to go like beyond, boom. It's going to go through my screen to the north side, right? But I am short-term bearish, and I'm long-term. Okay. And so let's take a look at one last, we look at gold, we look at silver. Silver broke out as well. My weakness, I don't trade silver well. I haven't traded that much. In fact, I bought physical silver at $50, and I'm still holding on to it. When we had that big spike back in what was at the brokerage, that we could go back. Let's go back. Let's see where Greg is. Greg got long the physical commodity right here, and I've been holding it for 14 years, waiting for a return back to the old high, right? No, not yet. But we did get a breakout, though. We had a couple of breakouts on this monthly chart. I mean, this thing moved sideways for a long time. Like, you look at accumulation channel, breakout. Nice. Another accumulation channel, high of like 29 or $30 and low of $20. Price rally. And then we've got a break, right? And, we got significant resistance, back at 50, right? And I sell it at 50, guess what? It goes to 100, right? So I'm just going to hold on to it. I get dollar cost average and buy more silver, and that way my cost base. So I bought some down here at 14, and then I would probably be at break even now, right? But it's just like that tick right there. That's me right there, right at the top at 50. $50 is what I paid. So here we go. So I am, I'm bearish because this really could not get out of this range. If you look at this thing, right? We could not get out. Let me move this out of the way, right? We broke. Yay. Oh, yay. I don't think that they're gonna, I think that we get a pullback into the range, but it's speculative. I'm not a big fan of silver, and but I think given the dollar strength thesis, I think this will be maybe a short term bear sell, and then we come back and retest this 29 area. I think we go much higher, but we've got these head fake. Silver is just a head fake. And my students go, "Hey, Dr. Greg, I'm trading silver." I go, "Good luck." And then they go, "What happened?" "Oh, he took my money." It's like, I don't trade silver for that. Look at this. You get long, it's pulling back. Silver is like something that you will, I would stay in it for a minute, and that's it. I wouldn't try to hold it. I'm holding physical, and I know, but short term, if this is a scalper's paradise. I think going down to 5 minute. I think you can. I think there's a lot of volatility on the smaller time frames. I think if you go down like a 3 minute, I think there's a party all over the place on silver. If you're above 5 minutes, though, I think that doesn't make any sense. Yeah. Now going down to a 3 minute, 5 minute, I can see, what's going on here, right? But if you're in a bigger chart, you're probably not going to see any of this, and you're going to go, oh, right. But it's only like, it's not even. It's moving in pennies. It's almost like a penny stock, right? It's moving in pennies. It'll be 32, 32.01, 32.03, 32. So you got to be in size in order to make any money in it. Using pip and run, right? I just avoid it. I'll trade gold. I was like, well, why trade silver when you trade gold? It costs the same. In Forex, it costs the same, right? Everything costs the same, except the margin which you have to put up, right? Anyway, I'm going to check crypto. That's my last one. I'm going to track BTC, USD, and similar. I'm looking at a similar theme. Remember, this is a dollar theme, dollar strength theme, and it's already starting, right? BTC, USD. What's this? Oh yeah, it's already. All right, look, go out to the monthly. Again, this is the same kind of thesis. I am long-term bullish, but short-term bearish. And you can see that we've got this kind of a topping pattern on long wicks, right? But we have a flag pattern, which this might actually buck the trend and say, look, buck the trend, right? We got a bull flag right there. And usually we get a flag pull. Ooh, my goodness, this looks extremely tasty, right? So it's like,
House of Pleasure.
That's scary. I'm looking for a breakout. We might move down this channel. Short-term bearish, very short-term bearish. But I think that once we maybe get back down to maybe 50, maybe in the 50s, one more time, I think we break out. And then now we're looking at $120,000 an ounce, right? Yeah. If you don't have any Bitcoin, you need to get some Bitcoin. Okay. This is not a trade recommendation by any stretch of imagination. You can lose any and all your money on any of this stuff, but I think it just be smart to have this in your portfolio as a way of hedging against anything. Because as this goes up, you can sell pieces, 0.01 Bitcoin, and then it's like pulling apples off a tree. If it keeps going up, the value keeps going up. Even though you take off small pieces called satoshis, so you start taking little pieces off as it's growing, and there's some people actually say that Bitcoin could hit $1 million, per coin. Okay. Well, that's going to be, so I will say I'm very short term, but I am long term. Bye. Right. Yeah. I'm like going, I think we go much higher, guys. So let me know your thoughts in the chat box below. And let me know what you think about any of the predictions and how they may turn out. Now, so the we have like a very interesting market. We're in the fourth quarter. This is the best part of the market. People go, oh, I'm going to go on vacation or I'm going to do this. I got to go back to work. This is the time where professionals make the big money, right? This October, this fourth quarter. So you better be ready. And how more can you be ready with education, right? So let me just say a little bit about the offer here, right? And so if you're ready to take your trading to the next level and you want to learn the exact steps you need to achieve consistent profits in the Forex market, then join my free masterclass on the Pip and Run strategy called 4 Pillars of 6 Figures. Now, this strategy has helped traders scale their accounts, pass prop challenges, and create financial freedom without spending all day at the charts. I mean, I spend about 2 hours on the charts and I'm done, right? So in this masterclass, you'll learn the same process my top students use to simplify their trading, avoid overwhelm, and focus on the one key thing that will move the needle in their trading success. I'll also reveal critical mindset shifts that allow traders to stay disciplined, confident, and consistent no matter what the market throws their way. So if this sounds like something you'd be interested in, click the link above or below in the description box and join my free masterclass. Now, if you're looking for a free resource to help you better manage your trades, improve your decision making, and avoid common pitfalls that derail your success, download my free guide. It's packed with actionable tips to help you master your trading plan and execute with precision. You can find the link to download the guide in the description box below or above my head right now. Now, if you want to be part of a supportive trading community where you can ask questions, share experiences, and get real advice from other traders like myself, then you want to join my free Facebook group called the Live Forex Day Traders Den. Inside, you'll get access to exclusive insights, live discussions, and the support you need to stay on track. The link to join is also in the description box below. Now, before you go, leave a comment below letting me know what you found most insightful in this video. I'd love to hear your thoughts. And if you found this video helpful, be sure to like it and subscribe to this channel for more valuable content on mastering Forex trading. And turn on those notification bells too, right? And also, don't forget to check out these 2 videos to help you build the skills and knowledge you need to trade profitably and confidently. I'll see you in the next video. Peace and pips. Dr. Greg signing out. Cheers.